Gujarat, Srimati Anandiben Patel, Honorable Finance Minister of Gujarat, Shri Saurabh Patel ji.
One is that it has to be non-disruptive, and secondly, there must be a proper sequence of the reforms so that the full benefit of the reforms will be available for the country as a whole. These two guiding principles we followed in the current our task of framing the regulations for the IBUs as well. For long, there has been suggestions from the thought leaders and the expert group. Accordingly, government, in consultation with the government, the decision has been taken and the rules have been framed. And IFSC, as we all know, there is no specific definition, but the way we understand it is the place where there is heavy concentration of financial transactions conducted by financial institutions who come from all over the world, and where the information and communication technology infrastructure is of very robust. So primarily, there should be three dimensions. First is, there has to be appropriate infrastructure. Second, there has to be a high level of skills and expertise available. And third, the regulations and supervision will also have to be very sound. Most IFSCs, they all evolved over the period. What happened in the New York or London or Singapore or wherever it is, the regulations and the centers themselves evolved over a period of time. But this time around, we are starting from scratch. So we have to be extra careful in framing the rules that we thought. We also kept in our view that some IFSCs, some centers in the world, they got notoriety because of certain practices that were followed there, and that bad name stuck on to them even after, long after they have corrected themselves. So we wanted to avoid that kind of problems also in case it should be happening in the IFSC center in India. So the international focus had been in recent times very much on the anti-money laundering related norms, anti-terrorist funding related requirements, governance related issues, and transparency related norms. So these are also prescribed by FATF, IMF, World Bank, and other institutions as well. So we have to keep all these things in our perspective while framing the rules. That's what we did. So regulations have to address who can start business and what are the various types of businesses that they can carry out, and what is the kind of capital requirements that should be prescribed, and the activities that they can perform or the activities that they cannot perform, and what resources they can muster, and what are the supervisory arrangements for the same, and what kind of ring fencing we would put in place. These are the items which we addressed. For that also, we have to keep in mind, typically an IFSC center financial institution, what kind of activities generally it is carrying out elsewhere in the world. To put it simply, the general principle is that it tries to capture higher returns on investments in exchange for the fee that it pays to the financial institution. To achieve this, it indulges in or it employs several specific type of vehicles, asset holding vehicles to park high risk assets, collective investment or derivative trading vehicles to undertake risky investments that are difficult to be performed onshore, but in this kind of centers that they can do. Then asset protection vehicles. So each one of these vehicles, we can easily identify the risks that they are inherently built into those vehicles. So our regulations, as I said, have to keep all these possible risks and accordingly frame it. So how did we do it? First, who can be there? Options are available, as I said in the beginning. Any and everybody can ultimately come on the IFSC scene. But to begin with, how do we start? We initially thought that we can start with our own banks because we have comfort about supervising them and managing them. Then later on, representations did come and suggestions did come that foreign banks should also be permitted. So among the foreign banks, we felt that today we have regulatory comfort with those banks who are already present in India, with whose supervisors we already have an MOU signed with them. Then with this group of banks, we have greater comfort. So initially, we have framed the regulation in such a way that these two types, that is our own Indian banks and the foreign banks who already have a presence in India, both of them can open IBUs, that is IFSC banking units in the GIFT city. The other foreign banks who are not present today, down the line we may be able to permit them if and when we have the separate authority for the GIFT city. Then today, these banks will be regulated under the Banking Regulations Act 1949, and the regulations require that anybody who wants to open any business unit in India will have to obtain license from the Reserve Bank of India. So there will be a licensing requirement that will be a normal formality which these units will have to conform to. The activities that they can perform, again, BR Act provides under Section 6(1) what are the various types of operations a bank can do in India. Those are permissible, subject to other conditions which we have framed. First, this area having been declared as non-resident location under the FEMA, so, and our Indian rupee is not yet fully convertible, so these units can have all their operations only in foreign exchange, any type of foreign exchange other than INR. That's the first principle and the rationale behind it. Secondly, we said that all business transaction can be carried out, that is any transaction relating to other than individuals. Individuals we need to have greater comfort, especially in the wake of the anti-money laundering related requirements, know your customer requirements. Unless the units here give us the complete comfort that they have built in enough risk control mechanism towards handling individual transactions, we have to wait for such permission to them. So to begin with, these units will be able to carry out transactions relating to non-individual based transactions. They can perform all financial products and services as I said under the Section 6(1). The transaction cannot be in cash because again anti-money laundering related requirements dictate that to begin with we will not be able to permit them to do cash transactions. All transactions will have to be account based, transfer based, and because individuals are not permitted to have, naturally accounts, deposit accounts cannot be permitted at this stage. All type of liabilities, again because individuals are not there, they will have problem in liquidity management. That is why we said that assets and the liabilities should be not less than 1 year old, more than 1 year. That means that short-term liabilities these institutions cannot undertake right now. They can deal with the permitted to have foreign exchange transaction under FEMA, so those things are permissible. They will be regulated and supervised by the Reserve Bank of India as any other foreign branch of a bank. When we supervise, same kind of expectations will be there on these units. There will not be any requirements of CRR or SLR, and there will not be any requirements of priority sector lending as well. They have to be strictly complying with and anti-financial terrorism related norms. That will be a very big requirement of these institutions. So similar other guidelines we have provided, and we'll be open to reviewing these guidelines as per feedback and as per prior experience down the line. Thank you very much for your attention.
Thank you, sir, for those great insights. Ladies and gentlemen, please welcome Chairman, Insurance Regulatory Development Authority of India, Shri T.S. Vijayan, for his presentation.
Honorable Finance Minister, Government of India, Honorable Chief Minister, Gujarat, Honorable Finance Minister of Gujarat State, dignitaries on dais, ladies and gentlemen. I am going to make a small presentation of what IRDA regulations are there and the guidelines that we have published for the International Finance Center. This presentation will be like this. What's the background of this guidelines that we have published? What's the potential in India for doing this business? And what's the business case for starting a reinsurance company in this place? As you are aware, the Government of India has issued notifications about SEZ on 27th March. And IRDA has also issued enabling guidelines on 6th April, by which Indian insurers, reinsurers, foreign insurers and reinsurers can set up IFSC office, that is IIO. To put it in background, that what is the business that is going to happen in this place? How this business has developed? As you know, Indian economy is one of the biggest economies. Insurance industry in India itself is very big. Nearly 4 lakh crore is collected as a premium. After collecting this direct premium itself, we are ceding to outside countries, outside reinsurers, last year around 7,300 crore to foreign reinsurers. Because we do not have that much capacity within India to reinsure the business, this is going outside. Please note this. Of this 7,300 crore, in fact, has gone to nearly 100 reinsurers. They have taken numbers here and gone outside. This is the one thing we should be targeting to retain in India through latest changes in the Act and this SEZ also. And also in India, as you know, there is a significant potential for improving the insurance penetration to global standards, 3.9 to 6.3, it should be very big. If you look at the progress of insurance in India, we can see the major legislative interventions have contributed to the growth of industry. It was nearly 2.32% in 2000 when the first legislation took place, opening the sector to private players also. Now it has gone to 3.9% of GDP, even though premium rates on many of the lines have come down drastically due to de-tariffing. The major legislative intervention in 2005 has increased the foreign participation in Indian companies to 49%, and several other measures to facilitate business. Because of all these things, Indian insurance industry is poised for growth. The premium that can be collected is not just 4 lakh crore, maybe much, much more. In this context, I will also place before you the what's reinsurance premium happening in the world and what is the role of offshore insurers. Global reinsurance premium is around $220 billion. Global reinsurance assets are something like $900 billion. Bermuda is a major offshore sender which is transacting $75 billion of premium a year. In the vicinity, in this nearby areas, there are two senders. The Singapore, now it is doing $5 billion of premium. The reinsurance in Dubai, which has started recently, has already collected around $1 billion US. So this is the context of reinsurance business happening, and of course, reinsurance, we have enough capacity here. Even though there are some lines of insurance business which is not available in Indian market, which should be available in the SEZ area also, IFSC also. So what really happens in reinsurance is, once the Indian capacity is over, business is going abroad to reinsurers. We would like to keep it in this way that first priority for the initial market will be for Indian business companies. Even then the spillover should be going to International Finance City happening in India. International Finance City is not just for Indian business. Indian business will be only seed business which can enable them to grow, they can start. Maybe we should be able to compete with the international markets like whether Bermuda or Singapore or Dubai. But we would like to offer them some business to start with by giving priority for these companies which would otherwise gone to abroad. Since these insurers are allowed to set up branches in this place with a 10 crore rupee assigned capital, and we would like this to become a reinsurance hub for SAARC countries and nearby insurance markets. Number of products are needed for the banking, other risk products are needing banking and financial services. We would like to offer a dynamic regulatory framework for establishment of these companies. We are discussing in IRDA what to do, how to take it forward. Probably those who are interested in starting business here in the city can expect very speedy approval for the same. I am already seeing a presence of number of reinsurers and brokers and insurance professionals connected with the international business sitting here. I would imagine some of them are getting interested. In fact, we have received phone calls from some of the people who are, after seeing the guidelines, that they would really like to set up the business here. And to them, the offer from IRDA will be that we'll be expediting their applications, and they will have some business to start with, at least for Indian business to come. Thank you very much.
That was the Chairman, IRDA. Thank you, sir, for the insights in the regulations framed by IRDA. Ladies and gentlemen, the Securities and Exchange Board of India has always looked after the interests of the investors. Please welcome its Chairman, Shri U.K. Sinha, for his presentation.
Honorable Chief Minister of Gujarat, Honorable Union Finance Minister, Honorable Finance Minister of Government of Gujarat, dignitaries on the dais, invited ladies and gentlemen. I will like to begin by first acknowledging the presence of my senior colleague from the Ministry of Finance, who has been the driving force behind this whole thing for more than 10 years, Mr. Sudhir Mankad. The way he has showed his commitment and passion for the gift city is something remarkable. At his age, he has the energy and commitment and passion which perhaps a young officer of 5 years seniority would also not be having that. I like to explain today what has guided SEBI in coming out with its regulation. What is it that we wanted to achieve? I will not like to get into details which are extremely technical in nature. The first thing I would like to say is that if we want this country to grow at 8% plus or even more and maybe in double digits, there has to be a very favorable environment for corporations to raise capital. And for that environment to happen, and we are noticing that, say, the young technological startups in the country, in Bangalore, Trivandrum, Pune, all over the country, they are saying that we don't have the right environment and they are threatening to go out of the country, to get listed out of the country to raise capital. Small and medium enterprises are finding it difficult to raise capital. So our whole effort has been that if an Indian corporate is trying to raise capital for its growth, then there should be a facility for him to not to be forced to go out of India, but to be able to raise that capital within this country. And for that purpose, if you can imagine that there is some corporate who feels that he will be able to raise capital in foreign currency at a cheaper cost, at a cheaper rate. But today the rules do not allow that. They have to go through either a listing in some of the exchanges, through a depository receipts mechanism, and if they want to raise debt capital, they have to go through the external commercial borrowing mechanism, which has its own hassles. So the question we try to address in SEBI is, why can't we allow them to do it in India? And some of you might be aware that we have already come out with a discussion paper, and we are going to introduce it very shortly, that Indian startups can also raise their capital in India without any need to go to Singapore or to NASDAQ or to Luxembourg. Similarly, large corporates who are in need of raising capital, how they will be facilitated to raise capital, the whole idea behind our guideline is primarily based on this. Naturally, if you want to raise capital, you have to have a stock exchange. You have to have intermediaries like brokers, depositories, and other agencies. So what we have done in our regulations and our guidelines is, we have made things very simple for them. There is already existing guideline for those who are operating in the domestic market. There, since a small retail investor participates, we are guided by extreme considerations of protecting their interest. Here, we have made lot of exemptions in the hope that our corporates will be able to use it, in the hope that stock exchanges which come up here, and we have permitted not only domestic stock exchanges but also foreign stock exchanges to come in here. Similarly, we have got provided for facilities for intermediaries like brokers, custodians to get registered here to start their business here. The second consideration which has guided us is that if you are an Indian individual, then and you want to take advantage through investment by the take advantage of the developments in the other parts of the world. If you are an individual, you have got some surplus, you want to invest that money in foreign securities or foreign mutual funds, but you are finding it very difficult because of a number of measures that have been provided. You are also aware that Reserve Bank does allow a liberalized remittances scheme whereby people of Indian origin or residents in India can take their money outside and then they can invest in the securities. What SEBI has done is to provide that those Indians who want to take advantage of the liberalized remittances scheme, they can make their investments in foreign currency in the International Financial Services Center. The third thing which has guided us is that you know that non-resident Indians, they can invest in India mainly and only in Indian rupee securities, mutual funds or other securities Indian rupees. What SEBI has done is to allow them, to permit them, to facilitate them to also invest in companies or in securities in dollar denominations or other foreign currency. And fourthly, we have provided, for example, that if there is a large foreign company and they have been raising money all over the world globally in foreign currency, then why can't India provide a platform or a system where they can raise money in foreign currency in India? And the International Financial Services Center provides that opportunity. Having said that, I would also like to add that this is just the beginning. In a way today, and personally for me, it's a very important day because I remember that almost 10 years back, more than 10 years back, we had set up a committee in the Ministry of Finance for setting up what are the rules and requirements for setting up an international financial center in the country. So almost after 10 years, this is coming to fruition. So in a way, it is a major vindication and a major milestone. However, I would like to add that this is just the beginning. What we have done is to only provide the rules. We have laid down the rules. A lot of work will start from today to convince people, to convince the intermediaries, convince the industry that they should come and set up their business, and then to convince outsiders, people outside India, to start taking advantage of it. I'm sure all of us together can work seriously towards this goal. Thank you very much for inviting me. Thank you.
Thank you, Mr. Sinha. Friends, As the Ministry of Finance and all the relevant regulators have shared the guidelines that bring us to this milestone, may I request you all to please give them a big round of applause. And now an important announcement. Today, GIFT Special Economic Zone IFSC is exchanging a memorandum of understanding with Kotak Mahindra Bank for setting up offshore banking unit in GIFT IFSC in the presence of the Honorable Chief Minister of Gujarat, Srimati Anandiben Patel, the Honorable Finance Minister of India, Shri Arun Jaitley ji, and the Honorable Finance Minister of Gujarat, Shri Saurabh Bhai Patel. May I request Managing Director and Group CEO, GIFT, Shri Ramakant Jha, and Joint Managing Director, Kotak Mahindra Bank, Shri C. Jayaram, to please step up to the dais and exchange the MOU in the presence of our honored dignitaries. Congratulations, gentlemen, for exchanging this MOU for setting up IFSC banking unit. The financial industry present here will shall respond to the proactive rules and regulations framed by the Ministry of Finance. And now, ladies and